And hello, happy Tuesday to everyone. Thank you for joining us for a very special event. I'm Mark Johnston, representing Follow the Money Investor Group. And today we get the great privilege of sitting down with two executives from a remarkable company based in Northwestern Ontario, Treasury Metals Inc. I have the pleasure of welcoming Jeremy Wyeth, President and CEO, and Orin Baranowsky, CFO. Just before we get started, gentlemen, I'm going to do a wonderful little top-line intro that Treasury Metals is a well-financed Canadian gold explorer and developer with a mine-building team in place. The company's federally permitted Goliath Gold Project, along with the Goldlund and Miller projects, are part of the greater Goliath Gold Complex, located in an unbeatable jurisdiction near Dryden and Sioux Lookout in northwestern Ontario, and in close proximity to world-class infrastructure. This year, Treasury Metals has embarked on a 60,000-meter drilling campaign to both increase the level of confidence and the overall size of the resource, as well as trade-off optimization studies as part of a pre-feasibility study. Its most recent preliminary economic study, released in February, demonstrates the Goliath Gold Complex has solid economics with a $328 million net present value, 30.2% internal rate of return, and an average of 102,000 ounces produced in the first 9 years of the mine life, with a total of 1.1 million ounces of gold produced over an initial 13-year mine life. The company has put in place a management team that has significant mine building experience, led by President and CEO Jeremy Wyeth, who built the Victor Diamond Mine in Northern Ontario. He took the Victor project from pre-feasibility study to nameplate capacity ahead of schedule and under budget. Joining the team as well is CFO Orin Baranowsky, who was involved with raising $1 billion in financing for Stornoway Diamond's Renard Mine. Vice President of Projects Clinton Swimmer was most recently at engineering firm Senco. Director of Exploration Mara Kelb has a significant exploration experience in northwestern Ontario with Goldcorp, Evolution, and Battle North. And Rachel Pinot, who was just announced this morning as VP of HR and Community Engagement, who has been involved in the IBA negotiations of several recently constructed mines in Ontario. Welcome to Jeremy and Orin. How are you, gentlemen?
Good. Thank you, Mark. And thanks for hosting this event. We're excited about sharing the news with your listeners.
Very good. I know the audience is very hungry, so I'm going to, in my usual style, step out of the way and let you take over with the presentation. And of course, on the back end, we'll come back in with some very eager questions for both of you.
Thank you very much. It's really a pleasure to be able to present to everyone here today. It's advancing the Goliath Gold Complex, a trio of projects in northwestern Ontario. I point you to our forward-looking statements. People don't really need an introduction to the area. Northwestern Ontario, very well-recognized gold belt, surrounded by Rainy River, pure gold, Red Lake, and Musselwhite. For us, very importantly, it's 100% owned Goliath Gold Complex, very close to really good infrastructure, and with the federal EA in place for the Goliath project. I'll speak to the term critical mass as we move forward with the results from the PEA. It's a combined 2 million ounce measured and indicated resource, and we have an aggressive 60,000 meter drill program this year to both convert and add to our resource. Significant upside potential in the exploration, which I will cover as well. A quick slide on the hub and spoke. I'd like to take you through the team that we have in place. The board of directors, Bill Fisher is now chairman after the acquisition, and we have 3 new members: Dan Wilton from First Mining, David Whittle, and Fraser Bourget, both as independents. So a good strengthening for us on the board. Background, Mark mentioned a bit of my background: 35 years in the industry, 25 with De Beers and Anglo. I took the Victor Diamond Mine from a very similar stage, pre-fees, into feasibility, permitting, IBAs, into construction, startup, ramp up, commissioning, and handed it over in 2008. Never thought I'd get the opportunity to do it again, so I was really excited when Bill Fisher approached me and asked me to do that. Orin Baranowsky joined us in March, also with a really good background. Started off as an analyst, raised $1 billion to build Renard, And then really importantly for us was CFO of the operating mine once it was commissioned. This is very important for me, putting together a team that actually knows what the final product looks like. Clinton Swemmer joined us recently, 20 years in the industry, been through this process many times, and will be the person to take us through the studies and into the final operations. Rachel Pino was announced this morning, is joining us as VP of HR and Community Engagement. Rachel has been involved in startup and staffing of quite a few mines in Ontario, as well as negotiating and implementing IBAs. Mark Wheeler has been with the company about 10 years, really knows the background, has been involved in the previous technical studies, community work, and permitting. Moira joined us recently from Battle North, good solid experience in the region. And Mackenzie Denny's was part of the consulting team working for us on regulatory affairs, and about a year ago joined us to help take us through this process. So all in all, they're a good, solid management team, skilled and strengthened board, which allows us to be set up for success. Orin?
Thanks, Jeremy. I'll quickly take everyone through our share profile and balance sheet. Treasury Metals trades on the TSX under the ticker symbol TML, on the OTC QX under the symbol TRSMF, and on the Frankfurt Exchange under TRC1. So after our recent financing that we completed in March of this year, we now have roughly 130 million shares outstanding, approximately 27.5 million warrants, ranging in maturity from November of this year to August of 2023, at an average price in the $1.50 range, and 5.3 million stock options to bring our fully diluted share count to the 163 million range. We're well funded, had approximately $18 million in cash on the balance sheet at the end of the first quarter. And that fully funds our 60,000 meter drill program in 2021, and as well as funds our expected permitting, technical studies, community consultations, and corporate activities for the balance of the year. Looking at our share registry, we've significantly increased our institutional share ownership this year, and have increased our overall institutional following, adding 4 new analysts, bringing the total to 6 publishing analysts for the company. We do have a sizable retail and high net worth shareholding, a significant portion of that being family office, high net worth individuals in Europe, in Switzerland, France, and Germany. And then to round out our registry, First Mining currently owns approximately about a third of the shares in Treasury after the purchase of Goldlund, but they've announced that they will be distributing 23.3 million shares and 11.7 million warrants to their shareholders. The data record for this distribution is July 14th, and the shares and the warrants will be in your accounts on July 15th. So we welcome all the new First Mining shareholders at Treasury, and look forward to the exciting journey we have ahead as we advance Goliath, Goldlund, and Miller towards production.
Thanks, Orin. I spoke previously about critical mass, and I think what's really important here is the addition of Goldlund was not a small addition. It took us from 50 square kilometers of land package to over 300, and it took us from a 10-kilometer strike length to 65. For me, critical mass is 1 million ounces, 100,000 a year in 10 years. And I'll show you as we move through the PEA results that we've managed to achieve that. So the acquisition, really important, the environmental assessment for the Goliath Gold Project. Nearby towns of Dryden and Sioux Lookout, and especially with the downturn in the paper industry, we have an available workforce for both construction and operations. The last project I built was the Victor Diamond Mine at the end of a 400-kilometer winter road. So world-class infrastructure for us here. Includes hydro, natural gas, CP rail, and the Trans-Canada Highway, all right on our doorstep in Dryden. I'll take you through quite a few slides on the exploration upside, and then the established area that we're in, the neighbors and the neighborhood. If we look at this slide and we talk about critical mass, on the far right-hand side, we have the two individual projects, and then shown as Treasury in the middle, the combined. And I think this gives us a great opportunity for a re-rating when we look at the peer group, that we've now moved from really being on the far right-hand side to the middle of the peer group. If we look at the results from the PEA, just very, very quickly, 1.1 million ounces total recovered in the life, 13-year mine life averaging over 100,000 ounces for the first 9 years. Low capital intensity, 233 million with a 2-year payback. And then a 328 million NPV and a 30.2% IRR post-tax at $1,600 gold. So really solid financials for us. And I think really importantly, it's technically a simple project. It's a 5,000 ton a day gravity CIL gold plant. It's not something that is very different. There are lots of them around. So again, a de-risking for us. I haven't seen this often in my 35-year career. If we look at the end of a PEA and we look at the fact that we have inferred, we have about 14% of the mill feed and about 11% of the ounces. So again, you can see that the projects have been around for a while, especially Goliath. And again, a thing that allows us to de-risk this project. If we look at the timelines, 2020 has come and gone, probably a year most of us would want to forget, but really an important year for Treasury. The consolidation and acquisition, started the environmental baseline work for Goldlund and Miller, and actually started a PEA, which was a technical study for the first time combining the two projects. So the PEA was issued in February. Immediately we started the trade-off studies for the PFS. I've mentioned the Miller initial resource. This really is symbolic for me, and I'll deal with it in more detail when we get to that point. And then the drilling program for this year, 60,000 meters, a drill at present running at Goliath and a drill running at Goldlund. And we're hoping in early July to bring a third rig onto site so that we can continue to meet our targets on the drilling platform. The next 6 months for us are the trade-offs and optimization studies. That takes us towards Q4 of this year, where we then have a decent project description. We understand what the project will look like. I found out the hard way on Victor, where we had a change to our project description after we'd started consultation and permitting, and we lost quite a bit of ground. Don't want to do that again. So while we are busy with those activities, they will start in earnest towards Q4 of this year. It's a 2-year process for provincial permitting, which would take us through to Q4 of 2023 for permits for Goliath and a construction decision. And Goldlund is about a year behind that. So 2021 becomes a gap analysis year and a baseline data collection. And that's why I mentioned in 2020 it was important to start that process. So we would have permits for Goldlund in Q4 2024. With a Q4 2023 construction decision, we would look at first production Q4 2025, starting initially with Goliath open pit, then moving at a late afterwards to Goldlund open pit, and then in year 4, Goliath underground. If we look at the hub and spoke model, most people are aware of the Atlantic Gold St. Barbara Moose River purchase in 2019 for 800 million. I've tried to put the two projects side by side here so we can have a look. If we look Atlantic Gold, 195 square kilometers, Treasury 330 square kilometers. They've got Tukoi 15-mile Beaver Dam and Cochrane Hill. We've got Goliath open pit, Goliath underground, Goldlund and Miller. Resources compare very favorably. In fact, our grades are a little bit better. But if we look at the distances from the spokes to the hub, we can see that our distances are quite a bit smaller. Bearing also in mind that a lot more drilling has been done at Atlantic. And I'd like to show what already is a compelling comparison with the upside we see in exploration for Treasury. This would become even more compelling. Straight out of the PEA, we have a whole lot of opportunities. These are, for me, low-hanging fruit. I won't go through all the details of those, but we're looking at things like ore sorting, alternative material handling. At present, we only have silver credits for Goliath, not at Goldlund, so we're busy doing test work for that. And probably one of the biggest opportunities for us is the metallurgical test work. We've got way more work done at Goliath, and we have recoveries where we would expect them in the mid-90s. But at Goldlund and Miller, we're in the high 80s, and we see a lot of opportunity with the additional test work we're doing at the moment to see upside for us there. Next steps, 60,000 meters of drilling to give us a resource update by the end of Q4. When we started the PEA, we changed the way that the resource had been modeled. And for the first time, we moved away from a purely geologic method to a statistical and probabilistic method. What we found was in certain areas, there was a lack of drilling density, which made it difficult for us to model continuity. And I'll show you as we move through the next 2 or 3 slides how the drilling program has been structured specifically to overcome that, to give us the continuity and assist us in improving the financials. We're also going to do something that I've done previously that has worked well. We're going to run live resource updates as we move through this so that when we decide to publish a resource update, it's not a long process. It also gives us the opportunity to ensure that we do get this drilling density to the right level to model the continuity. We'll continue with the trade-off and optimization studies and the baseline environmental work. And again, on something we learned on Victor, we'll be doing additional engineering, especially around closure planning and tailings, because quite often the permitting requires more work than is typically done in a PFS. So we're going to address that in this phase. And then we'll continue with local community and indigenous nation engagement. That's a picture showing the whole setup together. Sioux Lookout in the north, Dryden in the south. Goliath, where all of the infrastructure will be, and then open pits at both, potential open pits at both Miller and Goldlund. All of this falls within the Wabigoon Greenstone Belt, and the only 2 numbers I'd like to draw your attention to on this slide are the 65 kilometers and the 62 kilometers. We have approximately 1,500 meters at Goliath and about 1,500 meters at Goldlund that is reasonably well drilled. It's giving us 3 kilometers reasonably well drilled out of 65, leaving 62 kilometers either un- or underexplored. So lots of opportunity, and we'll see in the next few slides what that translates into. If we look at Goliath, the block on the top, this block over here is directly from the resource geologists. It's been structured to help us with the continuity and what we need. If we look at the 3 areas, the Goliath area, the Nosefold area, and the Far East area, all 3 had very simple soil signatures. Goliath has now been developed into the resource we have. The other 2 have actually not had any follow-up work done on them due to lack of funding over the last periods. So very important for us to drill these areas. We can see these results and these results here are pretty good results, and a lot of upside for us in drilling those as part of our plan this year. The Goliath underground operations stop at 600 meters. And the only reason for that is we have no information below 600 meters. So as we speak now, the drills are drilling down to over 750 meters because there's no indication that mineralization has changed here. We just don't have the information. So again, very important for us to demonstrate that it is open at depth. When we look at Goldlund, and again, we can see this area here is the drilling that comes directly from the resource geologist as to where we need to go. We've tried to indicate on the plan below the different areas that we're targeting. And what you can clearly see here is these areas where we have satellite pits. The pits are not joining. And this is as a result of that lack of continuity. So we've already done 15,000 meters of drilling in Goldlund. We've put out 4 press releases actually on Goldlund already this year. Initially, we were up in the northern area around here, and more recently in this area around here. And what we're seeing is we're getting the intersections we anticipate. We're getting higher than average resource grades. So we see great opportunity here for an increase in ounces, grade, and tons. And main focus for us is the Goldlund area because of the near-term ounces. But very symbolic for us is Miller. And on the right-hand side, we can see Miller 2018, 2019, about 7,000 meters was drilled, about 30 holes. And that translated into 79,000 ounces in the resource and about 49,000 ounces in the mine plan. Now, in 35 years, I haven't often seen 30 holes giving us 79,000 ounces. So very, very prospective. We've done 3,000 meters of drilling out of a 5,000 meter program this year. The press release did go out a few months ago, and we are seeing extensions on strike, and we're seeing additional intersects in the main pit areas. So again, a lot of upside. If I move back to Goldlund and I look at the Nosefold area and I look at the Far East area, I see high potential that both of these could be very similar to the Miller setup that we have. Orin, I'll ask you to take us through some of the valuations.
Sure, yeah. So we believe Treasury represents a very, very attractive opportunity to investors. And as we continue to advance the Goliath Gold Complex, we'd expect to see our valuation improve. So as you can see from these two charts, we're well positioned relative to North American gold developing peers, the 2 million ounce measured and indicated resource, which we'd hope to grow from our 2021 drilling campaign. But our market cap trails comparable companies. And we see a similar story in terms of whether you look at it on a price, P to NAV or an enterprise value to ounce basis, where we aren't getting the recognition from the market for the increased size from the Goldlund acquisition last year. So our goal is to continue to build the resource, regularly update the market on our drill program, and also with the progress from our trade-off studies over the course of 2021. And we'd hope to see the valuation improve because we feel there's a significant opportunity here for share price appreciation from where we are today.
Thanks, Orin. And if we look, I'll go back one slide. If we look at just looking at our peer group and looking at where we are with the environmental assessment and the permitting process, we one of the few with a federal EA already completed. And this definitely positions us well in the peer group. And we have seen recently some of our peers actually announcing delays in their processes. So again, from a position of wanting to get into an operating perspective, very good for us. If I look at just the last slide, the key catalysts, the PEA came out with very, very positive results. We're already busy with the PFS, infill drilling to convert and add to our resource in 2021. I think it's fair to say I don't believe this is a million ounce mine. I believe we will see significant growth in the resource as we move through this. I also think that the approach we took at the start of the year with the PEA of going to statistical and probabilistic modeling will pay off for us as we're able to take this resource from PEA to PFS to FS and see it grow. I've mentioned to you the live resource models and the updates that will come during the year. With the live modeling, I don't need to wait to the end of the year to do the resource updates. We could do it when we feel it's appropriate. We'll complete the trade-off and optimization studies towards Q4, get into more detailed IBA negotiations and the permitting. And I think very importantly for us is to use all the news flow and the results that we're getting through this year to take this project from where it is now and get it back onto the road to become a producing asset for Treasury Metals. And Mark, that's the end of the presentation. Would be more than happy to take questions on that.
I appreciate that very much, both Jeremy and Orin. It's always a great opportunity to feel like we're inside the company for an hour when we get feedback and presentations of that caliber. Thank you very much for that to you both. We have a very hungry audience, which is not surprising. So we'll get right into some Q&A happening here. We want to start with, you mentioned that the mineralization at Goliath did not stop at a depth of 600, that it's simply the depth at which they stopped drilling. Can you tell me, are there current plans to explore below a 600 depth at Goliath, or are you more focused on resources amenable to open pit mining?
Mark, that's a great question. Both, I can say both. We're actually looking at the Nosefold area and the Far East area, and those are important for us because they are more amenable to open pit, and they would probably be nearer term answers, but also really importantly for us to show the openness at depth below 600 meters, although those answers would probably be later on in the life of the mine. We can understand we've already invested all the capital in infrastructure to get to 600 meters. To go to 7 or 750 or 800 is not, it's an incremental cost rather than a major capex expenditure.
Okay, thank you for that, Jeremy. Next question we have here is, while you're busy delineating the resources at Goliath, Goldlund, and Miller, have you specifically identified additional areas for follow-up exploration?
Yes, we have. At both sites, actually, in fact, all three sites, Miller, Goldlund, and Goliath. We mentioned earlier the Nosefold and the Far East at Goliath, which are follow-up from work that was done, in some cases, 7 or 8 years ago. The work that we're doing right now on the Goldlund properties is trying to show the continuity. So it's follow-up from work that's been done over the last 5 or 6 years. And what we're trying to do is, if we can get the open pits to join, we see a big reduction in strip ratios. We see an opportunity to improve the pits. And the bigger we can get them, the more economic they are for us. So there's a lot of follow-up in those areas. And then at Miller, I would be very happy to spend a lot more time drilling at Miller right now, but it is an inferred resource towards the end of the life. So important for us to grow it and show how prospective it is. And then I think in years that follow, we'll have additional work on that.
Okay, great to hear that. Thank you very much. Next question here. Have you considered much more drilling at Goldlund and Goliath so that a proper sized miner mill operation can be built? Many think that you will greatly enhance shareholder value this way.
Yes, I think if you look at our program for this year, 60,000 meters of drilling, if we put it in perspective, the total drilling done at Goliath over its life is 180,000 meters. So we're drilling a third of what's been drilled in 13 years in 1 year. And the plan most definitely is to grow both resources. In fact, all three. And this is not a property that has a challenge with lack of targets. It's more a property where we challenged is how to prioritize the drilling during our program.
Okay, thank you for that. I know infrastructure came up earlier, Jeremy. A question comes, will your hub and spoke operation involve trucking, rail, or both?
That is, again, a great question. It's one of the trade-offs we're busy with at the moment. The initial assumption in the PEA was trucking between the properties. We have a national highway running right past the properties. But I do think there are opportunities for us, especially from an ESG type perspective. We are looking at rail via, we're looking at a couple of other options. We do own the continuous land package. We're looking at, are there more efficient ways and less disruptive ways to actually move that material. So it could be one, two, or all three.
Okay, right, fair answer. A question comes in saying, has there been any serious JV or outright buyout interest from larger companies to Treasury since they added the Goldlund resource to the portfolio?
I can definitely speak for the last 6 months that I've been there. Yes, we do have quite a few companies that are showing an interest. We have 2 or 3 typically at a time that are going through our data room. Mm-hmm. And I think that's really important because, from our perspective, we want to look at all different opportunities for us moving forward. We are very much focused on building it. We're not here to try and put paint on it and try and sell it. We are here to build it, and endorsement from big companies having a good look in our data room is always positive for us.
Fair enough. Good energy. Let's move over a bit to the finance and share activity category here, Jeremy. Do you anticipate further share dilution, and how are you planning to fund the construction of the project?
I think Orin's probably the best guy to talk to that, seeing as he raised $1 billion on Renard. Orin, I'll leave that with you.
Sure. Yes, there will be additional share dilution between today and when the project comes into production. I mean, we are not a revenue generating company. I think the goal for Treasury is to minimize the share dilution as we fund the different studies, the pre-feasibility, the feasibility, and then we'll look at, in terms of our financing options, what provides the best return for all stakeholders for the eventual construction of the mine, whether that be debt equity, streams, royalties. We'll look at the full gamut of opportunities with the goal of minimizing dilution and maximizing returns.
Okay, great. Orin, thank you for that perspective. Let's move back over to the technical side here. Brendan's asking, what type of high voltage power requirements do you foresee to support the Treasury facilities? High voltage interconnect and site distribution or transmission?
We're actually at Goliath, we're right on the power grid. So for us, that is a huge benefit. As I say, when I built Victor, we had to put in 400 kilometer power lines. We had to look at all sorts of things like that. So from power is not a major issue. If we did go, we have a slightly longer link at Goldlund and Miller to get power in, but not out of the ordinary in the area. So we're extremely blessed to have the infrastructure we have right on our doorstep.
Fair enough. It sounds like a great positioning. I know that there's a welcome video on your website that's quite informative. It talks about where you're positioned, close to communities, infrastructure. We mentioned as we were getting ready for our session today that I had the great privilege of spending some time at Sioux Lookout. I know that you're very involved with community, First Nations. Can you tell me a little bit about just the landscape and the relationships that are in play when it comes to creating successful venture like this?
Absolutely. And I think that's where, the company has been around for the last 13, 14 years. There's some very positive relationships that have been established in that period. In the 6 months that I've been there, I've met with most of the communities, and I must say, very positive. It's quite different to what I was involved in the far north of Ontario, where the communities had never experienced mining. Most of these communities already have existing agreements with mining companies. We found a lot of support from Sioux Lookout and from Dryden, very positive. I think the people see this as a great opportunity for the region. It's already a gold producing belt. The downturn in the paper industry, it's always good to have another industry step up and soak up some of the jobs that have potentially been lost in the past. So all in all, I see that as the relationships being very positive.
Great to hear that. And I can't ignore the wealth of experience that you bring, Jeremy, you in particular, over 3 decades working in the industry. Can you tell me, for those of us that are, say, newer to investing in this sector, why do you think the time is now? Why is this sector an area to really focus and keep an eye on these days?
In most of the areas that we operate, we look at the circumstances that we have in the area right now. And again, I keep comparing back to Victor. We had a similar setup where we had to staff the mine, and we had downturns in, for example, the paper industry there, and we were able to take advantage of that. I think we all pretty bullish on where we see the gold price going. That gives us a great opportunity. People seem to be gravitating towards that as a solid investment. If we look at, again, for us, I'm not saying specifically now just in the industry, but for us, the way we positioned, you don't often get all the puzzle pieces coming together. And I talk about the environmental assessments, the fact that we ride on infrastructure, the fact that we have an able and willing workforce right on our doorstep, the fact that we have support from the local region.
Yes.
So I think, when you get all of those coming together, it definitely helps you move down that road to becoming an operation and contributing significantly to the region.
Fair enough. So I appreciate that perspective with your time. Another question comes in. Due to the increased level of mining activity in Canada in recent years, have you had any issues finding qualified personnel or equipment? I think you touched on the available workforce, but let's hear more details on that.
We've found specifically on drilling, we've been lucky to be able to get sufficient support there that we've needed. But we are finding now, in looking for a third rig, that some contractors, for example, are saying we can help you in November for the first time. So we're looking now a bit broader. Yes, it is challenging on the personnel side, especially for the more senior people. We're finding the industry is booming, especially in our area. Everybody seems to be running studies at the moment. Everyone seems to be staffing up to move forward. So that is challenging. And then really where we've seen probably some of the biggest challenges have been in the assay labs, where the duration to get samples in and out we're seeing is extending, and has for the last at least 12 to 18 months. Mm-hmm. And you now start getting to a position where you're not always sending it to your closest laboratory, you're sending it to the laboratory where you have the capacity to actually, and we're seeing that now with where we need to do quite a few samples for silver credits, that we're actually needing to look further afield.
Yes.
But to be honest, that's all really positive. When the economy is growing like that, we're all in a win-win scenario. We battle a bit with it, but I think it's positive overall.
Fair enough. Thank you for that. We just had a wonderful 3-day conference recently where an audience got to ask very specific questions to folks like yourselves. And from a jurisdiction perspective, we've had several areas on the planet talk about why their jurisdiction is so appealing. I'm curious to know your thoughts, being in Northwestern Ontario, how that feels like it's the right place to be.
Well, I think I've covered quite a few of those. We're in the middle of a major gold belt. If you look around us and you look at, we're actually going to be quite a small operation in surrounded by some massive operations. Mm-hmm. The infrastructure is unparalleled. I think the fact that we're in, the Canadian jurisdiction, a lot of people do everything they can to get into that. Northwestern Ontario for gold is world renowned. Mm-hmm. Yeah, I think it's those pieces that all come together. It's why people fight to get in there. We're even seeing examples now, some of our northern neighbors, where we're seeing the Australian companies coming in very actively looking to invest in that region.
Understood. Well, thank you for that perspective. We have a new question that comes in from Steve, obviously noting and acknowledging there's been some positive drill results, but it seems that each time a positive drill result is released, the share price slips. It's a two-parter question here. Why might that be? And maybe I'll start with that.
Sure. Again, a great question. I think what I've been told by a lot of our shareholders is that there was there were two expectations at the end of the PEA. One of them was that the resource was a lot larger than it was. And
Yes.
I explained that we went to a completely new modeling method so that we can get a grounded resource that we can grow as we move forward. And the other thing that was raised with me was the fact of the timelines. There were expectations that the mine would be in production in 2023. So I think we've all established quite well that it's about a 2-year process for provincial permitting, and it's about a 2-year process to build it. So we're into a 4.5-year process. So those were the two things that have been raised a lot. I think most recently, though, if we look at the last 6 months since we started this drill program, we've seen a huge amount of volatility on the gold price. And I think, as gold companies, we are all impacted by that. And I also think we have an event happening in the middle of July where we have a share distribution happening, and people see that could potentially lead to some volatility. The feedback we're getting from a lot of the people that are going to become new Treasury shareholders is that they're excited about it. They, for example, joined First Mining because they liked a development story. We're a little bit more advanced than they are, so they're actually getting a shareholding in another. So you bought one, you're getting shares in another company that's also on a good road to a production facility. So I think a lot of those things, I think we're going to see, as the gold price starts to stabilize and as we move through that distribution, I think we're going to see a lot of opportunity for growth within our shares.
I appreciate that. And you may have touched on one or two points here, Jeremy, but the second component of Steve's question, a little more strategic finance realm, presuming there's already enough in the resource to justify development, could it be better use of cash to focus on the development decision and save more drilling until after a development decision?
Yes, I get that question, and I get the exact opposite. Why don't you sit back and drill for another 3 years and then build it? Our feeling very strongly here is that up until now, we never had that critical mass. For me, though, the important thing is I'd like to solidify that as we move through the process and into PFS and FS, and as we declare our first reserves, we're obviously going to have to convert what we have in inferred to indicated. So for me, there's a conversion process that we have to go through. But also, having just brought in the probabilistic approach, I think it's really important for us just to reassert that continuity, because, as I say, I don't see this really as being a 1 million ounce mine. I see it being significantly bigger. And at the end of this year, and exactly to that point, at the end of this year, we'll take a decision once we update the resource as to how much drilling we do next year. And it all depends on, sometimes we look at some of our peers are running 30 or 40 drills on site and the market's really excited by it. I've also worked on operations where we've had a 10-year mine life for 10 years, and each year you add what you deplete. So both are absolutely viable options, and we're not making a decision now as to what our drilling will be for next year. We'll take that decision to see how the market reacts to the results we're achieving.
Sure enough, moment by moment. I appreciate that. Sajad asks here, what are the chances of getting a permit for production in percentage terms?
Really good. I don't see anything at this stage. We already have the federal EA approved, and its conclusions were that there would be no adverse environmental impacts to it. And it's now a structured process we're going through to get the provincial permits for that. And there's nothing really in our setup that is a red flag to me on anything to do with permitting. It's procedural. We need to go through it. We need to show what our mitigation steps are. We need to show how we're going to manage all the risks. And I won't say it's a time-based process, but it is a process where you go through to get the support of the local communities, to get support from the regulators, and to go through. So from permitting it, I I don't see anything that stands out and says there's a high risk that we won't get it. I would say it's a very, very positive that it will come through within the timeframes that we are predicting.
Okay, good to know that. Thank you. One of my favorite questions, and I offer this to either of you, both Jeremy and Orin, the look ahead, the timeline, say 6 to 12 months from now, what are key milestones or key turning points we should be keeping an eye on with you as those that are interested in investing and watching the company?
If we look at it, we're in that stage of our development where we're doing a lot of drilling. So you're going to be seeing drill results. Our plan is on a monthly basis. I mentioned earlier, we are seeing quite a lot of delays in getting results out, but our plan is on a monthly basis. Mm-hmm. I also plan to start press releasing some of the results we're getting out of our trade-off studies.
Okay.
And then, as we move forward, I also mentioned the live updates to our resource model. And typically people wait until the end of the year and then do a resource update. We might actually take a decision during the year to do an update on, we've got 3 different resources, they all being permitted separately. There might be a process for us to actually do an update on one of them if we finish the drilling and it's ready. The fact that it's a live model means we can do that. So I think from our perspective, it's going to be drilling. It's going to be the trade-off studies and how that would impact the economics of the project, and then the resource. That's the phase we're in at the moment. There's not really a lot else that we can produce. Orin, I don't know, anything else from your side?
No, I think that's fair. Over the next call it 6 to 12 months is consistently releasing drill results from the different properties, the trade-off studies, resource update. And then, results from, looking at publishing a feasibility study in 2022.
And I think, Mark, as well, one of the things that's really important for us is just, it's a very new team that's come in, and we've, in December, January, February, we made a lot of commitments. This is what we're going to do. And I think it's really important for us to deliver on that and get the credibility that what we said is what we're actually delivering. I think we've seen that in the 6 or 5 press releases that have gone out on the drilling. We said we'd see continuity coming through. It's coming. Mm-hmm. We said we would be bringing in what I believe is a world-class team to build this. We've done that. And that's the process we need to go through now, so that we can, that the markets look at us and say, these guys are pretty serious about building this, and it's going to be a mine.
Excellent. Thank you both for that. Sajjad asks another question around climate change. I know we spoke about some favorable decisions regarding assessments and environmental impact, but are there any issues specifically with regards to climate change that could affect the ability to go into production?
Nothing that comes to mind on my side. It's again, we're in a very productive gold belt. It's Northern Ontario, so it does have its challenges, but nothing that I'm seeing where we are, as opposed to further north or further south, that I can say is a concern at all.
Great to hear that. Great to hear. Thank you. I always like to, as we start to look at winding down, open up the door to anything that we haven't touched on, or something that's come forward for you during the course of the presentation, or the questions that we want to leave our audience with. Any final thoughts?
Orin, I'll let you start, and then maybe I'll finish it off.
Great.
No, I mean, I think we've got a pretty aggressive plan for this year in terms of the largest drill program I think the company has ever undertaken, 60,000 meters. That's going to work a lot to prove the continuity of the resource, to help improve the economics. I think a lot of the work we're going to be doing this year is work to enhance and improve the overall economics of the project, make it bigger, make it better. And we're excited about the journey ahead.
Thank you.
And I think, Mark, if you look at it, it's and I think this is maybe where, for 12 or 13 years, both Goldlund and Goliath were just not quite big enough. And I think symbolic for us is we've achieved that critical mass. yes, we did get quite a lot of pressure on the fact that the resources were not as large as people had hoped. But we're really confident now that they're going to grow as we move forward. I think if you look at the last 4 or 5 years, there was a downward trajectory, and we're going to change that. The PEA by itself is really strong. It's got good economics. It's well, it's well put together. And if you look at some of the analyst coverage on that, they're actually saying it's one of the more grounded, realistic PEAs that they've seen in a while. It's not promotional at all. It's grounded. And I think that's symbolizing the team that's coming in. And we're here to under promise, over deliver, and we want to build this. We don't want to be, apologizing down the road for delays and not achieving what we said we would. We're actually here to go through that whole process and be part of that. And the other thing for me is just the quality. I said to you, it is challenging to find real quality people at the moment, but I must say we've been fortunate to bring in a really good team that has a lot of good experience. And I think that's helping set ourselves up for success. And it's I think the first time in the history of this company that all those pieces have come together. So for Orin and myself and Clinton and Moore, all the new people that have come in, it's an exciting time. A lot of really good work has been done to date, and we're able to pick that up now and take it to those last steps and become an operating mine.
Fair enough. I appreciate from both of you the perspective. It's always great to see community come together and actually have the chance to speak right to the source. So I want to thank you both, Jeremy and Orin, for bringing all you did to the session today, and to all our audience. As I say, community is the most important part of the energy here, that we get to interact with folks like yourselves, Jeremy and Orin. So thank you. And ladies and gentlemen, thank you for being part of this from all points of the world. This has been a wonderful tour through Treasury Metals with some of the insights and vision of the company, where things are headed and what to watch for. So I'll say thank you very much, Jeremy and Orin. Wish you both a great day ahead, and we'll look forward to watching the company from here.